What's up, traders? Welcome back. Today we have a very special stream. We have found potentially a very bullish Bitcoin pattern on this chart, something that we've been looking for, and now I think the chart finally looks like it's painting it. So I'm interested in your guys' feedback. There's a poll in the chat. Go ahead, answer it. We're going to go over this pattern in detail, and I hope you guys agree. So let's go. All right. That was an interesting setup. So what we're looking at here today, similarly to what we saw back in February, April, March, whatever, May, we are looking for a Wyckoff pattern. We'd seen a Wyckoff distribution at the tops here near 65,000. That brought us down to lows just around 30K, and here we are. So are we seeing potentially the inverse pattern? Wyckoff accumulation. I'm going to make the argument today that we are. I'm going to give you reasons why I think we are, but we're going to get into what is Wyckoff first. So let's pull this up. Boom. Wyckoff, first and foremost, is an explanation of momentum, of markets expanding and contracting. So on this chart here, this is from stockcharts.com. We have a bunch of little notations, and a lot of you out there probably have no idea what these are. And in fact, I'm going to be honest, I didn't really until I looked into them myself. So I'm going to help you guys out here, and I'm going to go over real quick what some of these mean. So on this chart, we don't actually see, yes we do, PS, preliminary support. This is where substantial buying begins to provide pronounced support after a prolonged downward move. That is what we had exiting May. And so I think we can likely identify this on our chart. Volume increases and price spread widens, signaling the down move may be approaching its end. SC is the selling climax, at which point the widening spread and selling pressure usually climaxes, and heavy or panicky selling by the public is absorbed by larger professional interests near or at the bottom. We see that right here. I think that fits our chart pretty well. We're going to go back and identify these. AR, automatic rally, which occurs because intense selling pressure has greatly diminished and a wave of buying pushes the price back up. Typically, we see a lower high there. ST, down here, you can see this in phase B, is the secondary test in which price revisits the area that the selling climax test to test the supply and demand balance at those levels. Up here, we have SOS, and I'm going to make the argument today that this is where we are right now. This is a sign of strength, a price advance on an increasing spread and relatively higher volume. Often SOS takes place after a spring, which I'm going to make the argument we've also seen, validating the interpretation of that prior action. Cool. LPS, this is the area where we might be able to argue that this isn't a perfect pattern. So that's the last point of support. So far, we haven't really seen this. We saw what could be considered a spring, and now at SOS, we've skipped this LPS. So it is possible we're calling this move too early. That's going to be important. You guys keep that in mind when we go over this. This is really being proposed as a question, not as much as a definitive statement. As you guys know, I'm not a huge believer in these specific schematic patterns myself, but they're worth looking at, as they did play, as we said earlier, back earlier in the year leading into this sell-off. So I think that's covers most of it. I think BU backup, and that would be a shorthand for a colorful metaphor coined by Robert Evans. And Evans analogized that the SOS to jump across the creek of price resistance and back up the creek represented both short-term profit taking and a test for additional supply around the area of resistance. So this also may not fit perfectly yet, though I think it is starting to fit better and better. Let's take a look back at the chart there. So with wicks on this chart, this pattern doesn't look quite as good. You can see that we don't really have that 1, 2, 3 lower low situation provided in the schematic. Our AR and our point of resistance up here doesn't line up perfectly, but I'm going to do something you guys might not be familiar with. We're going to remove the wicks from the chart. And yes, you can call this cherry picking. I don't really think that it is. I think it is a different way of looking at this. And when you do, this looks too good. It's too good. It's perfect. Maybe that makes me a little sketched out. When we take the wicks off here, we can see the lows coming down, lower low after lower low after lower low. We can identify this AR here. We can identify the automatic rally as we took off from the SC, which could be identified here. Yeah, I guess this could only be, this is the SC. There we are. Wait, SC to AR. Wow. Fail, SCAR. Okay. I shouldn't do this much at it. And then we see our resistance with our higher high here. So looking at this, we can identify maybe either of these as our ST. And down here, I think this is a pretty valid argument that this could be a spring. A spring is characterized mostly by shaking out of positions and then a strong rally back to resistance. And that's exactly what we saw here. I'm going to make this note again. We did not see the test or LPS. As you can see, we really just moved up. We did not test much support. And so that does make me a little cautious of this pattern still. But what's going on right at this resistance is too clear for me to ignore. And that is why we're doing this episode today on this pattern. We can see prices shot to that resistance and is now consolidating. And honestly, even looks exactly like this pattern here, though it is underneath that resistance, in my opinion, still not above it as this schematic would show. So here we are. Here we are. To complete this pattern, what we would expect to see is more consolidation here. There is no exact time frame on it, but then we would expect a break to the upside. If we're going to look at this chart and pick out areas of where we might look to break to the upside, I think these values that we have been talking about for months now are finally coming back in play. What's interesting here is originally I was looking for 48K when we fell in May because that's where the 20 daily was. Since price has trended down for so long, we see that the 20 weekly, has trended down as well and is now reaching that 200 daily mark. I think that this is the no-brainer next place to look if we see a break to the upside. We can see that this consolidation is also lining up with 100 daily. Price hasn't rejected from it yet. 2 days ago, we did see a rally up there and then saw it sell off. And the fact that bulls were able to keep momentum, push back up, and close candles near that 100 to me is definitely a sign of strength and SOS that fits our Wyckoff pattern. And the break to the upside, I think now, our prediction was always 45 to 48. And as time's gone on, I'm kind of maybe looking less at that 48, more at that 45. And that's right where these moving averages are. We can see below us, we have the 50 and the 20 looking to cross bullishly down at around 34.7. And if you were in the streams the last few days, you would know this already. A test back to this level could complete that Wyckoff pattern. It maybe wouldn't be awesome to see, but that would be a decent level to find support. You guys know when we see these crosses, they tend to get tested. Prices run away from them a little bit. And so to see the 20 cross bullishly with the 50 and have price come down to test it definitely would fit what we expect from charts. Now, none of this is set in stone. None of this is guaranteed. We're looking for patterns and we're looking for invalidation because that's what makes good trading. So move to the upside to complete this. 45. Dallin, I'm guessing that's you, my friend. Yes, it is. Love you, brother. Thank you for the 10. And thank you for waiting until I got mostly through that. I think I got through most of it. So there we are. This is what I would expect to see to complete it. Down here, I could also see this tested as support first. I know that's not super helpful. It can go up or down, right? That's really not ever helpful. But that's really where we are until we see possibly a daily candle close above the 100 daily moving average. We're still in this scenario where we may look to the downside, possibly completing that LPS support test before moving up. Watch these daily closes. Watch these daily closes over the next, I guess it's going to be the weekend soon. We've had some solid rallies on these weekends lately. Watch these daily closes, and you're going to be watching for a close above the 100 daily. That's currently 40,500, right in that area. I think if we get a close above, it'll also be a close above resistance, and I think that really does concerns about it. Drops typically aren't followed by consolidation and then drops again. Almost always in Bitcoin, at least, we see a strong move to the opposite direction before venturing down to new levels. And so if we do just run straight up to this 20 and reject, that is a really potentially bad situation. We're going to have to find support in that scenario, or else we do risk seeing lower lows here on Bitcoin in 2021. I'm not saying that I think that's the probable thing here. I think, honestly, we'll likely see some kind of retracement, though I don't see it on the chart yet. Possibly finding support around 37.2 before rallying up to that 220 20 weekly. These are going to be really important values. I think actually the probable move here, so test some support, move up to the 20 weekly and 200 daily. I want to see that weekly candle close above both of those moving averages, and then in the next week possibly see a slight retracement back down to test them as support. And if we get that, if that support can hold, I think we're looking for new all-time highs sooner rather than later. Now, there's a lot of conditions on that. I just went over them, but I want to be totally forthright with everyone. You guys know that's my jam. I'm not here to give you hopium when there's no reason to, or fudge you when there's no reason to. We're just looking at the chart. We're seeing what the chart's telling us, and that's why I wanted to share this bullish pattern with you, chat. What's up, Ghost of GG? You've seen this prediction more than once. Yep, actually, it's a good point. Back here, many YouTubers were calling this an accumulation, Wyckoff accumulation, right here on this wick. I will give it to them. That was a savage fake out because it did fit most of the pattern we were looking for. I don't think it's necessarily ignorance on their part or deception. I think that this genuinely was a savage fake out that any TA could have incorrectly identified. And really, we only knew it was incorrect in hindsight, so fair. I think now with this move from the low, fitting the description of the spring, I think that we can say this has a higher easy peasy. There you go for you guys at home. Ahmed Ibram is looking for a 35K, the retrace target. Yeah, I mean, I would agree 35K would be a great retrace target. As we were saying, basically what we would look for is for this 50 and this 20 to cross. Get rid of these. We would look for these to cross bullishly, and as you know, guys, I'm always skeptical of these crosses in crypto. So to see this come down, test that cross and bounce would be very bullish. I would then like to see it clearly break above 40,500 and move on to the cross above. It definitely could happen in the other order. That's what I'm more afraid of. I would not like to see price shoot up to the 20 and 200 and then before the daily or weekly closes, sell off, wick, and then close beneath them. For me, that would be the first signal of rejection and maybe the first spooky price action, in my opinion, that we've seen at all. And that is still up in the air, not guaranteed. Still something we're just keeping in mind as good traders. We're keeping all the options on the table here. So right on, Ahmed. Thank you, thank you. Ecom Saver. Ichimoku says we drop to 35 before we launch up. Ecoms, I mean, I love Ichi. So I'll take a look at Ichi as well. But let's make copy. Okay. Let's get rid of everything. Boom. Let's take a look at this Ichimoku cloud. Because the beautiful Ecoms suggested it. So I see what you're saying here. And all right, this lines up with our analysis. So I like this a lot. See, this hasn't really moved much. Things I like here on the daily. One, we're seeing the cloud finally twist. It's already twisted. It can still untwist. This isn't a guarantee. You can see that this is something like 30 or 60 days out. What I like here is we have a nice flat cloud. Typically, price is attracted to these levels. You guys know I was looking for tests up here of these fat clouds. We didn't get it, unfortunately. And you can even see price is interacting with the cloud as resistance here. To see price move down here to that flatness, that's right where the TK and KJ are overlapped. Actually, we have something really interesting that I'm just putting together in my brain here. So with these overlap, the TK and KJ, these purple and green lines, you can barely see them because they're on top of each other. It looks like TK's just sprouting out there. What we could see happen is if price moves sideways, doesn't set a lower low or a higher high in the next, 30 days, we could see this happen. And these, they're not moving averages. They're Tenkin and Kaijun lines. We could see them go sideways as well with price. And we could actually see the TK then cross up above the cloud. That would be very bullish. We don't have that yet. That's just a possibility. I totally forgot Crypto Jack. I asked him to tell me his opinions. And then I